Now, Nathan,
Yes.
this is going to be a huge surprise. I actually haven't told you what I'm going to be talking about first up, but I'm actually going straight into my IPO of the week. This is... You weren't expecting that, I bet. So this one's fun because it's actually one of the few... Well, actually, I think it might be the only one that I've done so far that is I'm bearish on.
Okay.
So
that's a fun one.
You know, it's a bit anti, but
I like it. No, it's good.
But it's not that bad. Like, it's sort of bearish, sort of.
We've seen some bad ones. What did I do? I did American movie.
AMC.
AMC, and I did Express.
True, I did GameStop. So yeah,
we've done our fair share of random ones.
Yeah, I'm probably further ahead on this one actually than GameStop. So less bearish, you could say. So this one is Doordash, and
Doordash has just a moment in what I'm going to say later on as well.
Oh, interesting. Okay, we'll get to that later. So it IPO'd on the 9th of December 2020. It was the hot time for IPOing.
It was.
And
really was.
So it's almost 3 months into the market so far.
Yeah.
It's definitely you're in a bubble when moment.
Yes.
So it's one of those because it IPO'd originally. The opening price was $102 a share.
Wow.
You have to guess what the price at the end of the day was.
Okay. 125.
It got to 182, which is a 78% gain.
Wow, in the first day.
Yeah, and it pushed the value up to $69 billion.
Wow.
Think about that for a couple of guys in an orange hat riding around on bikes. $69 billion.
That is pretty crazy.
Yeah, so no earnings. Well, making losses,
yes.
you could say.
Yep.
So that makes up a negative price to earnings, and for a crazy one-day gain.
69 billion.
Yeah, so that's what it was at a market cap of with 182 as the share price.
Okay.
But it managed to get to an all-time high on the 10th of February.
Yeah.
Which wasn't all that long ago.
No.
Because it's currently
It's about a month ago.
The 6th of March, we should say.
10th of February, all-time high.
Yeah, 10th of Feb, and it got to $215.
$215.
So I assume that's getting closer to 90 billion, based on the market cap before, maybe even 100, which is insane. So we've had... now that it's the 6th of March, we've had a bit of a pullback. So the current price has gone back down to 151. Still significantly higher than the IPO price. Still 50% higher than where it IPO'd at 102.
But that is lower than someone could have bought it on the first day.
True, yeah.
So someone could have bought it first day trading for 170.
Yeah. So it's still...
so that's interesting.
Yeah. It's not ideal for the... early IPO.
No, that's an interesting... Yeah, exactly, because there's a bit of a strategy, in quotation marks.
By every IPO.
For like a couple of months there where it was really booming, where it was... The concept was where you could basically just buy any IPO and you'd make money on it.
Yeah.
Maybe it was a good short-term strategy, but certainly didn't pay off for some people, as you can see now.
Yeah. Speaking of, I've got 2 more IPOs in the bank that I'm keen to cover off on the next.
Okay, so
on the
this
next
is really a
episodes.
theme.
Yeah.
Great, I like it.
But they'll have to wait. You'll have to
any SPACs?
Listen in anticipation, no SPACs.
Okay.
But that's another one of my special segments that I'm keen to chat about as well.
Okay.
So anyway, we'll get to that.
Sorry. Continue.
That's a episode 8 or 9.
Okay.
So anyway, we've got I've written down the positives.
Okay.
So we've got a revenue of 2.88 billion.
2.88 billion for 2020.
For 2020, which is a growth of 226% on the previous
year.
Which is a huge amount. But obviously we've had...
That would be expectations. Like, you'd expect it to grow a lot.
Oh yeah, we've had a pandemic, so no one can even go to restaurants in a lot of parts of the world. So obviously that's it's gonna be useful to have Doordash in your city. So 390,000 merchants, which is good. Yeah. And here's another positive that I've looked into. It's ghost kitchens or cloud kitchens or virtual kitchens. Yeah. So this is a really cool new area. So it's a whole concept where they build a kitchen which is optimized for delivery. So, or it can also be like an existing restaurant, which is like taking on a rebranding as an only delivery kind of brand.
Mm-hmm.
So the cooking is done in the restaurant and then repackaged as a different brand sometimes for like a pizza shop. It might be a little mom and pop pizza shop.
Yep.
And then someone comes up with this cool new, techno pizza or something, and then they send a bunch of packaging to them and they say, hey, we'll give you, this cut, and you just have to put it in the bag and hand it to the delivery driver.
Yeah.
And it could be rebranded as something else. So so it's kind of cool.
Interesting.
But so one thing that's an advantage of that is a kitchen can be set up in a cheaper, non-prime real estate kind of area.
Yep.
And then it can do delivery only, and it doesn't have to have the customer facing, or the sit-in area.
Mm-hmm.
So they can be set up anywhere, and it can reduce a lot of risks because it can take down that front-facing staff, and you just have back-end kind of staff, so it can reduce those risks.
And it's kind of cool because you can let those who have the comparative advantage, so those who are like the cooks and the chefs and that's their expertise, let them do that. Don't worry about the logistics.
Yeah.
We can take care of it.
Yeah.
Which is a great idea. It's similar to like allowing Amazon to do all of the logistics and deliveries of everyone's items for stores and stuff. So
it
makes a lot of sense.
Yeah, and here's a huge issue. This becomes a negative now because they're building companies which specialize in the area of cloud kitchen.
Yeah.
Which means that they can they've actually got these tablets which flow through, every delivery app flows through on the tablet, on the kitchen tablet.
Yeah.
And then it shows, so it comes in orders from Uber Eats, orders from Deliveroo, orders from whatever. So like it doesn't matter, it just flows through.
Yeah.
So that's a big negative.
True.
I've got another negative. They're making losses, obviously.
Yep.
So that's obviously what you don't want in a good quality stock.
Did you say how much?
They're making 280 million in losses based on their 2.8 billion in
revenue.
Revenue.
Okay.
So
200 mil.
So it's not bad for the revenue growth, but at the same time, are they really spending that extra income on growing their customer base, or was their customer base going to grow by that much anyway?
Yeah.
Yeah. So
true. There would have been a lot of natural growth.
Yeah. So it would have been like, hey, look at us. We're investing every bit into growing our customer base.
Yeah.
When really they're not. It's not the same as a software company, which is actually doing that.
Yes.
So we've got that. We've got not good value. The market cap is 17 times sales. So that's not ideal.
No.
Huge competition.
Yes.
So
very true.
Yeah. So Uber Eats acquired Postmates for 2.6 billion.
Wow. This. I also am going to mention that.
Oh, really?
Yeah.
All right. I don't know what you're talking about, but
interesting.
I'm excited by this.
Okay, go.
Uber Eats made 4.8 billion in revenue in 2020, so they've made $2 billion more.
Wow.
They've got 600,000 merchants, so they're winning there as well. I'll list off a couple of quick fire ones. So here's what I'm going to do. I'm going to say a name, and then you tell me if you've heard of them. Apparently, you've heard of a lot of them now, so it's not ideal. All right,
so these are the competitors.
I'll go competitor, then you say yep or no.
Okay, yep.
All right, here we go. So I've got Grubhub.
Yep.
Deliveroo.
Yep.
Menulog.
Yep.
Skip the Dishes.
No.
Waiter.
No.
Bite Squad.
No.
Zomato.
No.
And Domino's.
Yes.
That one was an easy one at the end. I don't know what you scored, but someone can work that out and tell us in the comments of our podcast.
I felt like I knew about half of them.
Yeah. So that's the problem. There's so many.
Yeah.
What's the difference?
Yeah.
I can't tell the difference. It's an app that someone's made.
Yep.
So there's obviously they're facing insane levels of competition.
Yeah.
And there's no real way to differentiate.
No.
Here's another issue. Because of the pandemic, this is a regulatory risk that I'm going to get into.
Okay.
Because of the pandemic, Washington, D.C. Limited service fees of delivery to 15% of the price of the order.
Really?
Which...
only within that state?
Yeah, within Washington, D.C. So it's a very small square. But at the same time, Washington, D.C. do stuff that a lot of the U.S. seem to follow as well.
Yeah.
And that was just because of pandemic risk.
15% of the cost of the goods or the sale.
Yeah, the order. So if you had a $10 burger, maybe $5 of chips, you can only make 15% of.
Wow.
So that's $1.50 of, or
$1.50 for a $10 burger.
Yeah.
Yeah, right.
So that's obviously not going to work for and because they wanted to limit that down to help poor people who couldn't go to restaurants.
Yeah.
And also didn't want to double the price of their thing, but you almost have to double the price.
Yeah.
To get that's the convenience,
Wow. You just need to order as a group.
Yeah, true. Yeah.
But anyway.
That'd work, yeah. So we've got my next point is about Mr. Beast Burger.
Oh, yes.
So this one's really cool.
Yeah.
And this is especially a bearish indicator here. Here we go. So this is a negative because Mr. Beast launched his own app instead of worrying about going through apps that already exist and and doing that.
Yeah.
He's also got the brand image. Like, no one knows who, Doordash is. Like, it's not an image, and it has no stickiness in terms of oh, that's a cool influencer.
Yeah, correct.
So he launched it through a YouTube video, obviously, where he opened a free burger restaurant and then gave burgers and money away to people driving down the block. And they had a 5-mile line down the block with police and got shut down because it was just too dangerous for the traffic.
Yeah.
And the video that launched it got 46 million views. So so
what's the population of Australia?
It is 27 million.
Yeah.
Yeah.
So that's nuts.
Or maybe it's 23 million. Yeah.
I think, 25. I don't know. Yeah. So anyway, it just gives a good scale. That's crazy.
Yeah. So that was launched on 20th of December, and here's what happened. He launched his real restaurant, which is Mr. Beast Burger, which at the same time.
Yeah.
And he launched 300 locations at once.
Really?
And all of them are cloud kitchens, which we talked about before there.
Yeah.
So stuff like that makes it really worrying to own something like Deliveroo or DoorDash or Uber Eats, because there's someone launching just 300 at once based on brand image alone.
Yeah.
And it's just terrible. It's terrible for those businesses, and the fact that you can go and make that thing up and just make your own app, which does what they've spent years working on.
Yes.
You can just go and do it, and he probably spent 2020 on it. He probably spent a year doing it, but still.
So he partners with the cloud kitchens and they make his burger.
Yeah, but it's his brand. So.
Yeah.
Yeah.
But who delivers it?
So here's the thing. So it was. I think it just started on his app, only on his app.
Yeah.
But now it's kind of a good thing because they've expanded out to doing it on DoorDash and Uber Eats and stuff as well.
Yeah, but when it was on the app, how did you get the burger?
Oh, you I think it was a delivery service that was
Oh, okay. So it also opened up another side of that. On the app, you could buy a burger, but on the other side of the marketplace, there was people who could also deliver the burgers.
Yeah.
Oh, wow.
Yeah,
okay.
So I'm pretty sure it launched like that.
Gotcha.
And then it switched to.
Okay, that makes a lot of sense.
But it's literally been.
He basically made a DoorDash.
Yeah, but it's literally been 2 months.
Yeah.
And they've turned that on as well as his own.
Yeah.
I think it's well as his own in-house thing.
Yeah. Okay.
So yeah, it's a lot to think about. It's
That is.
It's a not ideal.